I've been holding this setup for close to 3 days now. In this video today, I'm going to break down this trade. So, first off, let me start by saying Happy New Year, guys. This is my first video of 2024, and this video is just a breakdown video. There's no much value here, but I'll suggest or I'll recommend you watch this video all the way because there is something new. Yeah, you guys, most of you guys know that I trade mainly support and resistance, but that does not mean I'm limited to support and resistance. Okay. Before me getting into support and resistance, when I started trading, I first started with, support. I first started with support and resistance. Then I moved over to SMC. I traded SMC for 2 years. Yeah, 2 years. But 2 years, that's like 2 years learning. It's not like I treated it like a professional. 2 years, I was learning SMC while I was still in school. So when I finished, when I graduated, I knew that, okay, SMC was the way out for me. So when I started SMC, it was really, really hard. And I made no money doing that. When I went back to support and resistance, then I started seeing, some results. So this is 2024, and I'll be trading both strategies this year. So my first trade of the year, or I think this is like my second trade, but this is like the first, official trade. The other ones were just, So this is like my first trade. I've been holding this trade for like 3 days, close to 3 days, almost 3 days. So you can see a lot of back and forth in price. I don't even know, like it's like we're in some kind of consolidation phase right now because price is not it does not seem to go anywhere. You can see all the volume is being traded inside this range. Yeah, there's a 4 hour range here. The price is stuck inside. It hasn't broken it yet. So we are just looking at this, and this might break around February. Yeah, price could actually, move significantly to one direction, maybe around February or March. So for now, I don't really expect big moves this January. Yeah, so let me take you guys what I saw. Let me just run you guys down my idea on this trade and how I got myself in this situation. So I'll start off by going to the 4 hour time frame. I don't really use the 4 hour time frame much for when I'm trading SMC, but I use them when I'm trading support and resistance. This is like my main time frame. So I'll show you guys something here real quick. Yeah. So if you look at this very well, you can see price doing its thing. Then somehow price has broken structure here to the downside multiple times. But that does not confirm that we're in a very straight. We're like in a selling market right now. Yeah, I'll not tell you that, go and sell your USD. I'll not confirm that yet. But now I'll look at this in mini price. Like let's go into micro, micro structure. Look at this. You can see here that price form a low, form a high. Then from this high, where the price go, it went straight for these lows. Now, most people, let me tell you something real quick here. Most people assume or will see this and regard this as a break of structure. Some people will see this and call it a break of structure. But this is not a break of structure. Now, you can see now that it's not a break of structure. But in real time, you will not tell. In real time, you actually think this market has broken structure and you'll be looking to sell here. But if you look at it now afterwards, you see that, oh, this was just a liquidity grab. This was a rate. This was a liquidity rate right here. Price rated these lows here for it to push up. Now, how do I know this? Look at this. First off, for me to like confirm that structure is broken to one direction or I know that price is moving significantly to one direction, I like to see price push with lots of candles. I don't like to just see wicks. When I see wicks, I know that that represents high volume, on market conditions. When I see a wick like this, know that during this period, there was a lot of volume being traded here. And what does like one of the concepts that ICT usually preaches, or all of these people trading SMC, they usually preach and tell you that when the banks or the institutions, when they want to push price to one direction, they'll first sweep the lows or the highs. They'll first of all sweep liquidity or they'll sweep your stop losses before moving. So how do they do that? They don't do that one candle after another. They do it quickly. They just use like one candle here and they pump money inside and it just goes down with a lot of volume. This candle here traded with so much volume that it swept these lows without people even realizing, like before you even, oh, let me move my stops. It's too late. Like it happens so quick. It happens so fast. So that's what I'm trying to say here. When you want to tell a break of structure from a liquidity grab, you look at the speed or how the candles look or how they closed. The speed at which the market took to clear these lows will tell you that this is no break of structure. This is definitely a liquidity grab. When the market wants to move to a certain direction, it does it slowly. It does it slowly. When we see the market rushing to one direction, yeah, it's not going there to just push and continue. Now it goes there to stop you out, then move. See, let me show you something here. Look at this. When price was moving all the way up here, you can see how price was going little, small, small, little, small, 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 little moves. But when it wants to like raid or fake out, it happens so quick that you barely see it. So first off, judging from the way this candle looks, when looking for break of structure, this is just a bonus tip. When looking for break or confirmed break of structure, always like to make sure that your candles close out. When you see that, okay, this is a valid break of structure kind of. But when you see the candle sweep with the wick, then closes back inside the range, that's not a break of structure, that's a sweep. Same thing here. So you can see that price swept here and swept up. So when this happens, either ways, price has swept the buy side. The sell side and the buy side. All right. Price has swept both sides of this particular range. So what next? Go down on the 1 hour. I'll step down on the 1 hour time frame now. Then look at this now. When price sweeps both sides, you can see that when price quickly raided this one, it went up and did same with the upside. Now, both side liquidities have been grabbed. Now, I just want a break of structure in either directions. Anywhere, any direction that price breaks, then I'll look for a wick to trade to that direction. What am I saying? Here we can see a high. We can see a low. First, there was a low first, then a high. After that high, where did price go? If price could put a low and break structure to the upside, I would have bought. But that was not the case. Price put up a new low, but this high here did not do anything significant. It did not take out anything. This is instead building up more liquidity here. So when you see this, you know that, okay, you're on the right track of things. Then when price breaks initially now to the downside, when it finally breaks to the downside, this is now your confirmed break of structure. This is telling you that what you should sell. But now it's not like you're selling long term, you're selling short term. You want to hold price short term. Don't look for 1,000. Just look for something quick. You know? So price did break structure here, confirming that okay, yeah, I have to sell. I have to sell somewhere. So where am I selling? Let me go into 30 minutes. So where am I selling? I'm selling the wicks. Most of you guys that have been following me for a while now, you know that I'm a big fan of wicks. I trade wicks a lot. Feel me? So these are wicks. We can see here that this is the high responsible for the low that put out the new high that was responsible for the low that broke out structure. I'm repeating myself again. This high here is not a swing high. This is not a swing low. But this is a micro structure. This is microstructure, internal structure, yeah? We have the external points here and we have the internal points. Price has broken structure internally, telling us that price could quickly drop down, in as much as price could go up, could go down more. So we have another block here. Now, this other block is basically, the first candle before the big push to the downside. But now, if you look at it very well, I was highlighting just the wicks. I really care about the wicks, not the candle. So I looked at these wicks here. Why? Because these wicks represent high volume trade. When price got here, price moved down and was unable to close with the candles inside here. And it happens twice. So when you see this, when it happens twice, that means there is some sort of an invisible force that is stopping price from crossing inside this box. So price just keeps rejecting this box, telling us that what there's a force here that could potentially still push price if price should get there again. And that's exactly what I capitalized on. So price got there at the end of the day. You can see I was supposed to get in on this trade right inside this box. But what happened was the new pro firm that I'm trading with, it's not like I've abandoned my old pro firm. I'm still having my old pro firms on my account there. I'm trading them. Okay. I've linked them up. So this one is a new pro firm. These guys reached out to me on Instagram and they are new in the business. Yeah. So they are looking for sponsors, they're looking for brand ambassadors and all of that. So I was like, okay, I'll test your services out. They're good, then I'll put it out there. If it's not, then I'll still put it out there and tell people it's bad. So my first encounter with them was not that good. When I complained to them, then they explained the things out to me, right? So if you go to my Telegram, you see a post that I made there. I was so angry. But after all the clarification, I'll post the screenshot of our chat on the screen here so you can see for yourself. Yeah. So what happened was I'm trading with the one face challenge. So this is the one face challenge. One face challenge, they don't give you the 100x leverage here. They give you 50x. So I have smaller leverage, and with small leverage, I cannot buy that big of a lot. So I wanted to put 2% on this trade. I did all my calculations and I was just waiting for the market. So when the market got there, I did not get hacked in. So the market got there and deactivated my order because they could not send the order out. Yeah, it was too big. So I had to now go and recalculate with the smaller lots before coming back. Price was all the way down here. Then I entered Now here, this was my entry. Instead of up here, I entered here. I still entered anyways because I believe that price will drop down. And when you're trading other blocks, you don't really have like a chance where price will drop down, come back up, like bounce multiple times. It will just bounce and come down. It happens most of the time. So you can see here price dip, and when price retraced all the way up here, I actually thought I was gonna get stopped out. I was asleep. I woke up and I saw that price came all the way up here. I thought I was stopped out. As you guys, let me show you guys. I'm still in this trade. I'm still in this particular trade. So I thought I was stopped out, but I was not. You guys can see here. This is the trade. This is my entry right here, and this is the move here. Just like I think 2 pips would have stopped me out, but I was lucky enough, so it's still running. So I'm just looking. Let's see where the price goes. I have faith in this trade. If it does not work out good, if it works out good, I don't really care about this account that much. So let's see where it goes. I'll update you guys. Follow my Telegram for updates on this particular trade. And once again, Happy New Year. Check my description for links, guys. I'll see you guys in my next video.